The collapse of FTX is still a fresh wound in the crypto market. No one has stopped talking about it. Although there have been recent signs of recovery, the market has been hit with a new setback again. What went wrong this time? Recently, major exchanges including Coinbase, Crypto.com, and Gemini announced that they would pause business with California-based Silvergate Bank. Silvergate recently announced in an SEC filing that its annual report will be delayed because it is currently analyzing certain regulatory and other inquiries and investigations that are pending regarding the company. According to reports, Silvergate implied regulatory scrutiny to come in another section of the filing, referencing investigations from our banking regulators, congressional inquiries, and investigations from the U.S. Department of Justice. This action brought reactions to Silvergate's filing from Coinbase, Circle, Paxos, Crypto.com, Bitstamp, Galaxy Digital, and other exchanges, stating that they were suspending business with the bank, including transfers. Bitcoin plummeted, but not as badly as Silvergate's stock, which lost over half of its value. The crypto declines hit almost all major cryptocurrencies in the market. As we had stated in our previous video, Bitcoin was down 4.5%, dropping from 23,500 to a 2-week low of 22,259 before eventually stabilizing to around $22,390. The leading cryptocurrency by market cap last traded at these levels on February 15th. And with the latest price action wiping out $20 billion of Bitcoin's market capitalization, it now stands at $431 billion. However, altcoins weren't spared from this either. Ethereum followed suit as it fell 4.6%. Other major altcoins also had a fair share of the decline. Cardano, Polygon, Solana, Polkadot, Avalanche, they all suffered losses within the 4 to 5% range. And other coins such as Dogecoin and Litecoin were hit harder. The market capitalization of all cryptocurrencies shed about $48 billion overnight, leading us to be just over $1 trillion in total market capitalization. Silvergate's actions raised alarm bells for the markets. Its delay in publishing its annual 10K report, saying that further unreported losses could imply the bank is less than well capitalized, causing severe losses. But let's get a deeper understanding of what actually transpired. Silvergate, which also worked with the now bankrupt crypto exchange FTX and its sister trading firm Alameda Research, previously reported a $1 billion net loss, as well as a decline in customer deposits of about $14 billion in the last quarter of 2022. The crypto bank had secured a £4.3 billion loan from the Federal Home Loan Bank and sold around $5.2 billion in debt securities. However, Silvergate admitted that it was assessing the impact of its recent loans and determining its ability to continue as a growing concern. As many crypto companies moved either to distance themselves from Silvergate or to completely cut ties, the company's stock went into freefall. Established in 1988, the California-based Silvergate rose to prominence over the last decade for its early commitment to work with crypto clients, reaching a valuation of about $6 billion as in its November 2021 peak. However, just as Silvergate rode to impressive heights, the loosely regulated industry risk with the high-profile bankruptcy of the FTX exchange spelled its likely downfall. Silvergate endured an $8.1 billion run during the last 3 months of 2022, as clients panic over Silvergate's 9-figure dealings with the fallout of FTX. Shares of Silvergate are down 98% from their November all-time high and fell nearly 60% recently after its top clients jumped ship. This tragic event reminds us of the ripple effects stemming from the FTX's collapse. It has even undermined confidence in the industry. Silvergate did not start in crypto, but in real estate. Back in January 2014, the bank jumped into Bitcoin. Unfortunately, that was not the perfect moment because the year was suffering in the cold hands of volatility. In 2014, Bitcoin started the year at $770 and closed just above $300 in December. Some of the companies that were being formed at the time to provide services into this budding Bitcoin space, many of them were struggling to find and maintain bank accounts. So that's where we really started. Silvergate CEO Alan Loon noted in a June 2022 podcast. Things went well later on, but we can't say the same given the current situation. And now a disclaimer is on Silvergate's website, and it reads, effective immediately, Silvergate Bank has made a risk-based decision to discontinue the Silvergate Exchange network. All other deposits-related services will remain optional. Another decision that followed this action was from the United States Judge Michael B. Kaplan, who said that Silvergate had to return $9 million deposited by BlockFi. According to the documents posted on the website of BlockFi's restructuring advisor, The court ordered the bank to immediately release the funds after an agreement between the two companies in November 2022. Just to give you a quick reminder, BlockFi was one of the crypto firms that was affected by the FTX collapse, and also Silvergate. The crypto bank had liquidity issues due to the crypto bear season before being hit with major outflows in the last quarter of 2022, leading to $1 billion net loss. To limit the effects of surge and withdrawals, Silvergate repeatedly borrowed $3.6 billion from the U.S. Federal Home Loans Bank System. In a report published by the SEC, the digital bank asset highlighted the heavy outflows of deposits and outlined steps taken to maintain cash liquidity, including wholesale funding and the selling of debt securities. The crypto bank is also facing first class action lawsuits over its connection with FTX and Alameda. The wounds are already a bit open, so let's avoid talking about them too much further. The situation reminds us of the FTX collapse, which effectively crushed hope and killed crypto hype for the rest of the last year. Crypto prices were already on a downturn all last year, but the early days of November 2022 were brutal. After the implosion of FTX, prices plummeted drastically. There were so many questions, and most of them have still yet to be answered. One of the prominent ones was, how safe are your investments? According to a report from Wall Street, FTX had lent billions of dollars in customer assets to the crypto trading firm Alameda Research, in which the CEO Sam Bankman-Fried was the major owner. Then, Alameda had reported used the money to fund some high-risk trades. It was also reported that Alameda's balance sheet consisted largely of FTX token, and this raised major red flags that Alameda was built on a cryptocurrency that its sister company created. Immediately after this report got out, investors started withdrawing their money from FTX. However, since FTX had lent so much money to Alameda, it did not have enough funds for investors to withdraw. As a result, it faced a shortfall of roughly $8 billion. The exchange would file for a Chapter 11 bankruptcy, and the FTX CEO resigned. As a result of this collapse, shockwaves were sent to the crypto sector, and many are yet to recover from it. It has affected more than just the exchange itself. Cryptocurrencies took a hit, and this is quite similar to this most recent situation. FTX reportedly held about $1.2 billion in Solana tokens, which made the crypto particularly vulnerable to FTX's implosion. The situation also made investors cautious about crypto. If investor concerns, coupled with the most recent events, continues to grow, there are chances that the prices will drop to their lowest levels that we've seen in a while. Generally, many investors are worried about the impact of crashes on their crypto holdings. So if you're feeling nervous right now, then the feeling is definitely mutual. FTX's downfall was an important example of why it's not only a matter of which cryptocurrencies you buy, but where you keep them. To protect your investments as much as possible, it is advisable and wise to store your crypto holdings in a wallet rather than on an exchange. This will help to avoid problems when the unimaginable events happen to said exchange. Also, to play it safe, it's important to stick with well-known cryptocurrencies rather than small, riskier investments. In many senses, the crypto space is still the Wild West, and until it faces stricter regulations, events like the FTX crash and Silvergate's troubles will always surface. While major cryptocurrencies like Bitcoin and Ethereum are not immune to these downfalls, they perform better in pulling through these difficult phases of extreme volatility. Cryptocurrency is still an inherently risky investment, and this is a reminder to only invest the money that you can afford to lose. The ultimate solution to these troubles could be heightened regulation in the crypto sector. Various lawmakers have long supported more crypto regulation. The FTX collapse last year instigated its intensity this year, and the SEC has swung full into action, and that could potentially set up more policies to avoid future meltdowns. It has not been easy for many crypto investors, and this is understandable. Just when many thought that the past had been swept under the rug, it resurfaced as a result of the Silvergate issue. However, a long-term outlook is still the key. Nobody knows for certain what will happen in the coming weeks, months, or even years, but increased regulation could make the crypto industry a safer world for everyone. But that's going to do it for today's video. Be sure to click subscribe and notification buttons.